You're listening to Protecting What Matters by the Ohio Department of Commerce. Commerce is Ohio's chief regulator, and we play a vital role in keeping you safe by protecting your property, your money, and some of the products you use every day. This is designed to bring awareness to important issues and help educate consumers and businesses. Join us as we chat with trusted industry experts focused on providing you with the tools you need to help you protect what matters most in your life.
What investors really need to think about before they start jumping into cryptocurrency, a lot of people get the idea of, well, this is all going up, we don't want to miss out on it, so it's the, FOMO, essentially, fear of missing out. They really need to do due diligence. I mean, as much due diligence as an investor can do in anything, crypto or not, it is the best thing that they can do, best prevention.
Thank you for tuning into this episode of Protecting What Matters. Today we're going to discuss the complex world of digital assets, specifically cryptocurrency, and the many things you should consider before investing your money in this area. I'm Jamie Crawford, Public Information Officer for the Department of Commerce's Division of Securities, and joining me today is Janice Heitzman, who leads the Securities Enforcement Division here. Also joining me is Timothy Jones, an Investigative Supervisor with the Enforcement Division at Securities. We're going to discuss all the dangers and uncertainties in the cryptocurrency world, as well as the ways you can keep yourself safe if you do decide you want to invest in this area. So before we begin, thank you both for joining us.
Thank you for having us.
So as we get started here, we're hearing a lot more about cryptocurrency these days, and in some ways it seems to be becoming more a part of the financial mainstream, if you will. You see all these celebrity endorsements, commercials. You've seen big-name banks and investment brokerages offering services in this realm. But it's still an area that's really not well understood, and it's a not well understood concept. And many of the headlines you see about cryptocurrency pertain to its role in frauds perpetrated by financial scammers and also its unregulated nature. I mean, there was a recent report where we saw hackers were able to steal or defraud individuals or institutions out of more than $1 billion in the first half of this year alone. That's, I guess, more than double than what was stolen in the same period last year. So there's certainly a lot to be concerned about when we get into this issue. And as we begin the discussion, Tim, I might start with you and just, if I could just ask you in its most basic form, what is cryptocurrency and how does it work?
So cryptocurrency in its most basic form is literally just a peer-to-peer system that allows for a transfer of value through a decentralized mechanism utilizing cryptography. That's essentially in its most basic form. I mean, you can expand on it, but just to keep it simple. How it works, so someone would have a wallet, and that wallet could either be a hosted wallet or an unhosted wallet, in which we can get at that later on. But they would purchase cryptocurrency typically from an exchange, which would be a centralized exchange, which some of the big ones would be like Binance, Kraken, Crypto.com, Coinbase. They would purchase it from there, and then they could either store it in their wallet addresses that are provided by the centralized exchange, or they can move it off to a cold storage wallet, which would be an unhosted wallet, and they can have physical possession of it that way.
And before we sort of tackle a little more of cryptocurrency, Janice, I thought I might ask you about if you could explain a little more about how the Division of Securities, how they operate, and what are some of the things they're doing in this area these days.
So the Division of Securities regulates the sale of securities in and from Ohio. As part of that, we license broker-dealers, security salespeople, investment advisor representatives, and investment officers. So insofar as cryptocurrency is a security, falls within the definition, then we regulate that space as well. Within the enforcement section where Tim and I work, we are a criminal justice agency. So we investigate potential violations of the Ohio Securities Act, and that includes all types of investment schemes, including Ponzi schemes and crypto asset-based schemes.
Tim, as we circle back to you, cryptocurrency, as I understand it, is it differs in many fundamental ways from traditional types of finance that we might normally be thinking of, or their bank accounts and that sort of thing. Can you explain and elaborate on that a little bit?
Yeah, so cryptocurrency, for the most part, is unregulated. There is a little bit of regulation as far as in the actual businesses, like the hosted exchanges, that will sell the cryptocurrency, which is typically done through like money transmitter licenses, which, depending on your state that you're in, they have their own division and is usually titled different things. That, however, going into differentiation of traditional securities, it's highly speculative. And so with cryptocurrency, there's usually really no underlying business model, or there's no underlying business that you're investing in. You're actually just investing in an algorithm, so to speak. Unlike mutual funds or stocks, there's usually an underlying business model. There is usually an underlying business.
You mentioned this a bit ago about the digital wallets and that sort of thing, which is sort of the vehicles that are used to invest in cryptocurrency. Can you expand a little more on how you might purchase or invest in crypto? And is there, what it sounded like you were saying was there are certain ways that you could certainly find yourself susceptible to some troubles if you're not careful about it, correct?
Correct, yeah. So, there's a whole host of ways one can invest in crypto. The most popular would be just to buy and hold and sell, when it's high, and buy when it's low. But wallets in generally you have two different types of wallets. One, you have an unhosted wallet, which an unhosted wallet is the individual user would maintain control of their own private keys. Private key is essentially what allows you to have authority over your crypto assets. Hosted wallets typically are ones that are being done by another service. They typically tend to be centralized exchanges in which they maintain the control over the private keys, while they give their users like a login password and username to log into their accounts, much like an online bank. But the users don't have control over their assets, as they don't maintain the private keys. So what happens a lot of times is, especially with these hacks of these larger exchanges, they get hacked and the passwords get compromised. So it allows individuals to come in to steal the crypto through by exploiting the password vulnerabilities. Versus if you have an unhosted wallet, you maintain that private key, and which is a lot more secure than what having a hosted wallet would be.
But it's not always like a bank account where you just you can log in real quickly and see what your balance is or what you're doing and that sort of thing. Is that correct?
Well, if you have a unhosted wallet, no, not really. You can't really do that. You can log in, you can see what your balance is, but it doesn't really reflect as far as an US dollar equivalent. That is usually reflected, though, in a hosted exchange or hosted wallet. So you can just log in through just a traditional password and username in that regard.
And I guess as we wrap up this first block, I did have another question about the basics of cryptocurrency. As I understand it, there are certain assets, digital assets, that are labeled as stablecoin, where they follow the value of the U.S. dollar, but there are many other assets that are not of the same sort of value. Is that correct?
Correct. Yeah. So with stablecoins, a lot of them will say that they're using a combination of precious metals as well as a fiat currency, which is U.S. dollar or Canadian dollar, what have you, that would help to regulate and stabilize the value of the coin to basically a 1-to-1 ratio. Now that is for stable coins, and typically that would be something like Tether or USDC. Now with Bitcoin and Ethereum, those do fluctuate with market valuation, and those values are really all dependent on the centralized exchanges who basically set the price. They have order book systems to where they can basically use supply and demand to determine what the price of those coins are. And that's how the price would be evaluated for those. But
yeah, so it sounds like it's pretty speculative.
it's highly speculative, yeah. So if if anything changes in the marketplace, it can go up and down dramatically.
Okay, well, thank you for that. We're going to take a quick break. We'll come back in a few minutes and discuss some of the more real-world dangers of using cryptocurrency, and also just discuss some of the groups that are more likely to be targeted for frauds and scams in this area. So we'll be right back in just a minute.
It's your money, come and claim it. The Ohio Department of Commerce Division of Unclaimed Funds is safeguarding nearly $4 billion in unclaimed funds. So there's a good chance you or someone you know has money waiting to be claimed. Just head over to our website, unclaimedfunds.ohio.gov, to search for your name, the name of a family member, or a loved one to see if you have an unclaimed fund.
Welcome back to Protecting What Matters, a podcast from the Ohio Department of Commerce. Again, joining me today are Janice Heitzman and Timothy Jones with the Division of Securities Enforcement Division here at the Department of Commerce. Now, in the last segment, we discussed what cryptocurrency is and how it operates, but let's dig a little deeper now into the potential downsides that are involved here. Tim, we sort of touched on it earlier, but there are real-world hidden dangers here that ordinary investors might not be aware of, or maybe think it won't happen to me, have that type of a mindset. Could you sort of explain what sort of dangers are lurking in this area?
Sure. Well, some of the hidden dangers, it's a new technology, it's unregulated, so it's ripe for fraud. A lot of fraudsters are using it to conceal funds from illicit activity. A lot of fraudsters are using it to scam people out of legitimate money and use that as a vehicle to help facilitate the flow of funds. There's really a whole host of red flags that individuals can be aware of when dealing with cryptocurrency, especially when they're solicited by someone online, or if it's a wrong text message or a wrong email, or just any type of unsolicited communication. Be wary of those communications from individuals that you really don't know all that well, or if you've never physically met them, or if someone from a dating website or online wants you to invest in cryptocurrency with them. Be a little wary of that. You're going to want to do as much due diligence as you can, vet the individual. Are they licensed to help, invest your money? And another thing to keep in mind that a lot of people don't realize is that since this is unregulated for the most part, a lot of these exchanges that do sell cryptocurrency and crypto assets, you don't have the FDIC or SIPC protections there. So if these exchanges will fail, then you're not going to be protected. Investors or account holders can be left holding the bag and be out thousands, if not hundreds of thousands of dollars. And one thing to keep in mind that there have been crypto assets and exchanges that have failed. So it's not that it can't happen, it has happened. So just keep that in mind.
Absolutely. Janice, I guess my question would be, is there a sort of specific group that you are seeing that typically falls victims to these types of scams over others, maybe age groups or demographics, that sort of thing?
I will tell you that the elderly population is especially susceptible to this type of fraud. And it may be because they're a more trusting generation. It may be because they don't have the resources or the knowledge necessarily to conduct due diligence, especially online, to identify certain frauds and scams. And there may be some cognitive decline. And so all of those things together lead them to be especially susceptible to these types of fraud. And I will tell you that scammers are targeting the elderly population, including the elderly population here in Ohio. So you need to be wary for yourself, for your family members. If you have somebody that's in that position, make sure that you're talking to them about their financial situation. And what we also see is that the elderly population might be, as Tim talked about, they may be lonelier, they may be living alone. And so when they get a phone call from a number they don't know, they may be more willing to pick the phone up and initiate in a conversation, which can lead to fraud. Or we see a lot of wrong number texts, as Tim mentioned, where they'll engage, right? Somebody will send you a text, you don't know who they are. They will respond and engage, and then very quickly in that conversation, it goes offline to a system where where communications can't be stored to keep it kind of blind, and then it'll lead to fraud. So they are susceptible, the elderly population. They are more inclined to get re-victimized. I will tell you, in our cases where we have elderly victims, in many cases, there are multiple subsequent attempts to re-victimize them with new scams and different scams.
Oh, so you're seeing a lot of repeat cases, or the same individual that is experiencing the same type of fraud, a different type of scam, but same type of way of doing it?
Yes, we just had a recent order that the division issued where it was one victim and it was 3 different scams that they were susceptible to. Now we think, they may be related, right? But yeah, once you're on the list, once you've given your information, it can be on the dark web. Those lists are sold and transferred, so be wary.
And Janice, if I could stay with you, I know the enforcement division here was quite busy with these types of cases, and you sort of touched on that here. But is this a big part of your work that you do in the securities division? Like more and more these days, seeing frauds that are associated with the cryptocurrency type frauds?
Yes, absolutely. Crypto-based frauds, just over the course of this calendar year, make up about 1/4 of all the complaints that we see. So 1/4 are crypto related. And in the past 30 days, that's even grown to close to half. So it is exploding here in Ohio. We're getting complaints on the front end. We're able to take action on the back end. So in this calendar year, we've initiated 11 actions based upon crypto fraud or other violative conduct. Those actions have involved 19 bad actors and close to $1.1 million in loss to the victims identified in those cases. So it's growing exponentially. It's a huge impact to the Ohio economy, but it's a huge impact to those victims, many of them who have lost their life savings in these types of scams.
And you have seen that people have lost their complete total savings from these types of frauds and scams?
Yes. Retirements, 401ks, yes.
Well, we were going to take a quick break here. When we come back, we're going to sort of discuss in the next block things you can do to keep yourself safe if you do want to choose to invest in the cryptocurrency realm and other important things to consider. So we'll be right back with Protecting What Matters.
Thanks for listening to Protecting What Matters from the Ohio Department of Commerce. We are your resource for all safety information for your home or business. Here's a quick safety message reminder from the Ohio State Fire Marshal's office.
So smoke alarms, we want to make sure we're putting those on each level of the house. Each bedroom that you're at, where anybody sleeps, put that inside that bedroom, and then outside where the people sleep. They're important because what you typically have is that early activation, early notification of something happening, in this case smoke building up, and that usually is what tells you that there's a fire happening. So having those placed in those locations that are appropriate, making sure that you're checking the alarms themselves about once a month just to make sure that they're working. Change the batteries on them, we like to say twice a year right now. And then after 10 years, those entire alarms are going to need replaced.
For more information on the State Fire Marshal, visit our website at com.ohio.gov/fire.
Welcome back to Protecting What Matters, a podcast from the Ohio Department of Commerce. Again, joining me today are Janice Heitzman and Timothy Jones with the Division of Securities, the Enforcement Division here at the Division of Securities. Tim, if I could come back to you, as we've noted, cryptocurrency has become more prevalent and accessible to ordinary investors, and many people understandably want to get involved if they can. In the last segment, we addressed a number of the vulnerabilities and fraudulent scams that can be part of that. But if you're an investor here in Ohio and you want to get invested in cryptocurrency, what are some of the things you need to think about before making that jump?
Yeah, good question, Jamie. So what investors really need to think about before they start jumping into cryptocurrency, a lot of people get the idea of, this is all going up, we don't want to miss out on it, so it's the FOMO, essentially, fear of missing out. They really need to do due diligence. I mean, as much due diligence as an investor can do in anything, crypto or not, is the best thing that they can do, best prevention. look to see where they're going to be putting their cryptocurrency into. So a lot of times these exchanges will say, they can offer a better return when they're doing these trades behind the scene. But research that exchange, see if they are a licensed money transmitter or money service business. See if they have a legitimate business license, which with whatever state or whatever country they appear to be operating from. Call the Ohio Division of Securities, check with us, check with the United States Securities Exchange Commission, see if they maybe have some type of registration with them. Again, contact your local state to see if they're licensed as a money transmitter. Also, be wary of the individual that may be advertising these investments as well. Are they real? Double check. Make sure you do as much due diligence on them as you can, vet them. See if they are licensed to be giving investment advice to you as an investor. And then also look to see on Better Business Bureau is a very good resource, and it's publicly available too. Just do some simple Google searching just to see if that there is any type of bad press out there involving this individual or this exchange that you may be doing business with.
And I would imagine as we have this discussion about the things you should do as you're researching, and just by knowing the digital, a lot of this is done over the internet and that sort of thing. I guess it's important to do all this research because I'm just assuming, just based on this discussion, we're talking about overseas exchanges and that sort of thing. It's very easy for the person who's asking for this money to just disappear, right? And your money with it to just disappear, correct?
Oh, correct, yeah. So typically what we've seen, at least, with these scams is once an investor will send this individual money to whatever this new exchange or exchange may be, that they'll keep victimizing them for more money as far as in fees or taxes, or they've been threatened with some sort of governmental fine. And then once they can't get any more money out of them, then they vanish. I mean, it's essentially, a rug pull, so to speak. But it's also, something that should be noted too, that when you're dealing with cryptocurrency, that unlike traditional finance, once you send that money to someone or whatever business or whatever wallet address that you're sending that crypto to, it can't be recalled. It's a one-way street. So crypto can only be sent; it can't be requested.
Yeah, so once it's gone, it's gone.
That's correct, yeah.
Janice, what sort of resources are out there to help Ohioans? Here at the Division of Securities, I know we have many help Ohioans learn about more about this and how they can get help in this area if they do become a victim of fraud.
Yeah, and Jamie, I want to say how much I appreciate opportunities like this to get the word out before the fraud happens. And Tim and I have spoken with a lot of investors, victims who have, like I said, lost their life savings. And we would 100% of the time rather be speaking to them before they invest than after. So thank you for the opportunity to be here. And also we provide outreach. So one of the things we offer, if people call our division and they have a group that they would like to learn more about crypto fraud or securities investment or what we do, we will come out and meet with that group and talk to them. So that's one resource that we have. But really the biggest resource we have in enforcement is that we investigate these complaints. So if before you invest, you can, in addition to all the things that Tim said, call the division. Our toll-free number is 1-877 683-7841. Call us. We want to talk to you. You can also go online. There's lots of resources at www.com.ohio.gov. And you can file a complaint, either any of those ways, calling the division, going online. And we investigate complaints. And if there's a basis, we take action. We can take administrative action, a cease and desist. We can take civil action, like injunctive action, to freeze accounts, and we can refer the matter criminally. One of the best resources that we've got, one of the best tools that we've got recently is the Ohio Investor Recovery Fund. And this is a fund, the sole purpose of this fund is to provide recovery to Ohio residents who have been victimized by investment fraud. And that includes crypto-based scams as well. This is a fund that can be funded up to $2.5 million per calendar year, and it has been over the course of the last 2 years. And we've paid out from that fund over $1.5 million. This year alone, we've paid out $56,000 based upon our work to victims of cryptocurrency fraud alone. So this is getting money back in the pockets of Ohio residents who have lost money, along with all of the other resources that the division can provide.
Yeah, it sounds like an incredible resource and program, and certainly a lot of information out there that investors can look into if they're interested in this area. Thank you, Janice and Tim, for joining us today. That was a very helpful and informative discussion. Just a reminder that the Division of Securities, as Janice just said, provides a variety of information and resources with the goal of providing consumers and investors, like our listeners here, with tools that are essential to make smart financial decisions. And again, you can visit the Department of Commerce's website at www.com.ohio.gov, and then just navigate to the Division of Security section that has a number of resources and helpful information there to be used. Thank you again for your time today, and we'll speak to you later.
Yeah, thank you for having us.
Thank you.